Hi everyone, I'm Sarah from American Offshore Wind Academy, a professional development academy dedicated entirely to offshore wind. We collaborate with the industry's top minds in order to advance the industry as a whole, delivering interactive in-person and online courses to advance knowledge, to increase networking throughout the industry. In this LinkedIn Live series, Ask the Expert, we grab some of those top respected minds in the field of offshore wind to have a quick 10-minute chat with them so you can broaden your offshore wind knowledge in the time it takes to enjoy your favorite tea or coffee. Today, I'm joined with Ollie and Ben from Marsh. So, hey guys, welcome. And do you mind giving a small introduction on yourself?
Yeah, definitely. Thanks, Sarah. So, hi everyone. I'm Ollie, Holme. I work at Marsh, insurance risk advisory firm. I have been living in Boston, Massachusetts for almost 5 years now, with the sole purpose of supporting the US offshore wind industry. And over the last few years, we've been supporting 12 gigawatts of US offshore wind construction, targeting construction between 2025 and 2030. In terms of my background, I spent 10 years in the London insurance market, working for offshore wind developers, helping them with their kind of risk management requirements through the earliest contracts through to their main contract packages, and then helping them design cost-effective insurance programs through construction and operations. I'm very happy to be here with everyone today.
Yeah, thanks, Ollie. So hi all, my name's Ben. I'm a client advisor within Marsh. I help our offshore wind clients throughout the entire supply chain. So that could be our developer clients that are building the projects. That could be T&I, transportation and installation contractors that are installing the components offshore. It could be professional services in advisory, in like engineering advisory or legal advisory. And it could also be some manufacturers that are actually making those components. So I've spent about a decade in the offshore wind industry, recently made a career change into insurance, liking it a lot, learning a lot. But yeah, here, I'm here to support our clients with the risk management needs that they may have, as well as just broader advisory questions. Marsh is a global firm. We work in all of the offshore wind markets around the world, so we have a lot of lessons learned that we're happy to share with our clients. And I do a little bit of that consulting and research work on behalf of our clients.
Wonderful. Yeah, thank you both for taking the time to be here today. So today's topic is the evolution of offshore wind insurance. And this is great. Decades of work has now brought us to finally entering the construction phase for major offshore wind projects in the United States. But we've been seeing a little bit in the news lately about insurance claims popping up based on component damages, for example. We're already starting to go through some growing pains here in this construction part of the offshore wind industry. So do you mind talking to us a little bit about how insurance functions in the offshore wind space?
Yeah, definitely. So I suppose really to start off, there are sort of three main insurance coverages that we handle, and that have had, I guess, the most meaningful impact in supporting the offshore wind insurance industry. The first is property damage. So physical damage, physical loss during the construction phase. Lost cable off the side of a barge or a transition piece or something like that, or a fire during testing, commissioning, and then subsequently physical damage insurance during the life cycle, the operations of the project. There's also insurance for lost production. So to the extent that physical damage creates a delay in the project's ability to start up generating revenue, there's insurance for that. And likewise during operations, for business interruption arising from an insured physical damage event. And really the third main coverage is cover for legal liabilities arising from the construction and operations of the project. So that's physical damage or injury to third parties. There might be a third party cable that you're crossing, or farmland, or so really claims arising from the activities of construction and operations. So yeah, and obviously please stop me if Sarah and Ben if you have any questions or anything. But really, I guess from the first wind farm that was commissioned back in 1991, the insurance industry has been there alongside, the offshore wind insurance developers throughout the entire journey, to where we are today. So over 30 years, really, the insurance industry has been working with the developers, supporting them through the construction and operations phases of their projects. Probably one of the biggest things to, I guess, comment on is the fact that the first projects that were built were consisted several turbines, a few hundred million euros to build, and obviously today we've got projects where you have over 100 turbines being built over 100 kilometers or miles from shore. So the insurance industry has really had to do quite a lot really to keep up with the growth and scale of the industry over the last 30 years. And of course, now that projects are being built outside of Europe, there are additional risk factors, not least natural catastrophe potential events, obviously in the Far East, and also US and Northeast named windstorm in the Americas. And also there's the added challenges that comes with a less mature supply chain. Fewer vessels, fewer domestic manufacturing facilities. All of those things have the potential to increase the cost of construction, increase lead replacement times, and just generally, increase your insurance claims when and if you are to have them. I'd say, for the first few projects, there are really only a handful of insurers. You could probably name them, or number them on your hand, really, who were sort of insuring the first few projects in Europe back in the 90s and early 2000s. But as the projects have increased significantly in size, the insured limits required have grown exponentially. So, you can't really rely on just a handful of insurers anymore. And for some of the larger projects, over a gigawatt, we're seeing, panels of insurers that range from anything from 20 to 60. So, the number of insurers now participating in offshore wind has grown substantially, which is obviously, really good sign. We want to see the industry being supported by the insurance industry in particular. So I think, in terms of kind of a very brief overview of the evolution, I hope that gives you a bit of an introduction.
Yeah, and just to follow up on a couple of points, Sarah, for folks, the property insurance that's required on the developer side for these projects is huge, and one insurer isn't going to be able to take on all of that capacity. So what Ollie was mentioning with 20 to 60 markets, you might need to have 20 to 60 insurers cost share in insuring the property coverage that you would need for an offshore wind project. So as a smaller person within the supply chain, you might be dealing directly with one insurer for your property coverage. You might be dealing with one insurer for your casualty, for your employer's liability coverages. As an owner operator of a vessel, you might be dealing with one P&I club to help you to insure some of your liabilities. But with these developers, when they have projects that are hovering around the $10 billion mark in terms of capital cost, in order for them to achieve the insurance coverage that they need, you need to split that between 20 to 60 different financial entities to manage that risk. And that's part of the work that Ollie and I do on behalf of developers, is just to take them around to those markets to try to get them the financial capacity that they need. Okay.
Yeah, and as you were mentioning that this market is definitely growing. That's great. That does mean that that there's a viable business case here. Offshore wind is a valuable market to be entering, and if more businesses are coming in, so with these other companies now starting to pop up a little bit more, you have the industry growing, projects getting bigger, technologies needing to adapt as well. What about insurance? How is that adapting, and how are the liabilities being able to spread throughout all these stakeholders?
So it's a good question. So the insurers generally, their primary area of expertise, I would say, is sudden and unforeseen physical damage events, and machinery breakdown. Is one of the areas that they kind of specialize in. I would say that there are other types of risks like faulty design, faulty installation, faulty workmanship. And the insurance industry has always taken a cautious approach to those types of losses. And so, it's always important to make sure that, when allocating risk around faulty design, faulty installation, faulty workmanship, insurance isn't necessarily the product that is considered to be the first point of recourse. Insurers will expect that risks arising from design, faulty installation, sits with the party who has control of the risk, who's being paid to do the work, and obviously who's the expert in delivering that particular part of the project, with insurance kind of sitting really in the background around those things. So the insurance industry, I think, has done a fantastic job in offering coverage for design workmanship and faulty installation and over the last few decades. But I think as the scale of the projects start to grow and the risk profile continues to develop in different territories outside of Europe, we might find that there's a finite amount of insurance capacity for faulty design and installation and workmanship. So I think that's probably one of the biggest areas of focus for us. When managing expectations with projects around to what extent the defects can be insured in the commercial insurance market, and really getting a handle on where those risks are allocated across all of the contract packages. And it's particularly important in multi-contracting, where you've got a different contract for supply, a different contract for transport and installation, and just making sure you manage those interface risks around particularly defects. So I would say that that's probably has always been the biggest challenge and continues to be so today.
Yeah, if you end up working with Ollie and I, most of it is going to revolve around okay, we've set the term, we have some terms for insurance, but now it's okay. How do we try to manage that risk through project design effectively? Mm-hmm. How do we try to manage that risk through the contracts that you may be executing with subcontractors? So, what kind of risk is the cable manufacturer bearing? What kind of risk is the cable installer bearing? What kind of risk is the developer bearing once they formally own and are operating that cable? As many of you may know, cables are one of the stress points within the industry, both in terms of the supply of cables, but then also they're one of the weakest links within a project. So deal a lot with cable failures and what's the financial risk that goes along with a cable failure. So at least in Ollie and I's day to day, that's one of those items that pops up as we're looking at contracts and trying to help people manage risk. And I mean, the projects have gotten larger, so the financial risk has gotten larger. And I think that's something that I would just try to share with people broadly, is that offshore wind industry is a great industry to get into. There's a lot of opportunity. There's a lot of growth. The dollar signs are pretty big. And with that, the liabilities are pretty big. So just if you're entering into a large package scope of work, just be prepared to enter into if you're entering into $1 billion foundation contract, there's a lot of liabilities that can go along with that $1 billion foundation contract. How are you going to manage that as a contractor? Not just as a developer, but also you as a contractor. How are you going to manage that?
Just $1 billion, that's it? Wow.
It is only part of a project that's somewhere around $10 million. So.
Offshore wind ain't cheap. All right, then since you're talking about the future, this is perfect. So can you both give me a quick 30-second summary about where you see where offshore wind insurance needs to be in the future? Like, what can we improve? So like I said, quick 30 seconds wrap up for your main point.
So obviously more insurers participating in the sector, and obviously we can help provide education. It can take 5 years or more for an insurer to go from investigating the sector to being prepared to actually participate and underwrite offshore wind risks, which we completely understand. And finding more ways to insure named windstorm, natural catastrophe risks in the US and the Far East. There's always going to be a finite amount of capacity, and it's going to be limited, and it's going to be costly. So, one of the areas that we want to focus on, particularly for the US, is trying to identify more insurance capacity and more ways to transfer risks arising from natural catastrophe and named windstorm.
Yeah, and insurance is like any other industry within offshore wind. It's having to evolve and grow with the industry. So as Ollie mentioned, building additional insurance capacity so that as these projects get larger and have higher CapEx values, we're also able to have more markets to go to that are able to underwrite that risk. And then specialized risk. So cables is an area. So trying to find terms and conditions that are cost effective for managing cable risk. And it's something that's being discussed globally, but it's are there ways to have some allow for more preventative maintenance, which then also still allows you to have insurance coverage later on down the line. Your property damage isn't going to kick in until there's actual physical property damage. So just because a cable is going to break, it doesn't mean insurance is going to cover it. You got to wait for the cable to break. But if you knew the cable was going to break, you should have repaired it. So it does create a little bit of a decision matrix on behalf of the developers as they're trying to figure out how they want to manage these multi-billion-dollar assets. So that's something also that we're working on here at Marsh, is to try to expand the scope of that coverage for our clients.
Yeah, makes sense. That would be great. All right. Thank you both so much for taking the time today to unveil a little bit about the history of insurance and where we're going from here. If anyone's interested in learning a little bit more about insurance, Ben is going to be co-leading a class with Sean, who you might have seen in one of our previous podcasts about marine warranty and insurance and risk. So catch that on May 15th. You can see it on our homepage. And again, thank you so much, Ollie and Ben, for your time.
Thanks, Aaron. Thank you.